I'll talk about insurance in India. Section 14 of the Insurance Regulatory and Development Authority Act of India 1999 lays down the duties, powers, and functions of Insurance Regulatory and Development Authority of India, which is basically to regulate and develop the insurance sector and all associated aspects pertaining to the same. The IRDAI constitutes a chairman, 5 whole-time members, and 4 part-time members appointed by the Government of India. As far as insurance claims are concerned, there are a requirement of submitting different documents at the time of claim, which we'll come to see later. There is an ombudsman for addressing the grievances pertaining to any insurance claims or related such aspects. We also have a claims review committee. Claims, as I spoke earlier, such as death claims, would require the claimant or the beneficiary submitting a filled form along with the death certificate, original policy document, the beneficiary's bank account details, Aadhaar card, PAN card, proof of age, address, contact details such as phone number, email ID, etc. Claim settlement can be on occurrence of the insured event or on maturity. Both could be a reason for settlement of claim or claim for settlement. ULIPs and term insurances are 2 different types of life insurances. ULIP is unit-linked insurance plan in which a part of the premium goes as an investment as well. So from that investment, the beneficiary will get returns in terms of bonus extra, whereas in case of term insurance, it would be only the return in case of the insured event occurring. It is only pure insurance. There are no investments. Underwriting is a process in which the expert assesses the insured event, the QRs of the insured, and also the premium, whether it is within payable limits of the insured. The requirements, there are different requirements of an insurable risk, which are such a risk should be exposed to a large number of units. Like for example, life insurance is, death in life is applicable to all living human beings, isn't it? So it's an exposure to a large number of units. So life insurance, life or threat to life is an insurable risk. And loss must be accidental and unintentional. Let's say you insure for fire accident, and that coverage will be applicable only in case of fire causing by short circuit or such accidental nature, not the insured intentionally set fire to his property and then trying to claim. That will not work. Loss must be determinable and measurable in the sense that when you are, let's say, insuring for fire, the property covered, let's say a house, it is costing 80 lakhs rupees. So it is determinable. That's the losses. Determinable, 80 lakhs house. Measurable, it can be measured in terms of the cost quoted in the sale deed, and also the interiors done, furnitures contained in it, and stuff like that. Loss should not be catastrophic in the sense that flash floods causing rampant, loss. That may not be applicable, and it should be calculable, obviously. Social insurance includes public health insurance, public unemployment insurance, social security, extra. Marine insurance is another thing which is applicable to all kind of cargo. And marine doesn't mean only for the goods transshipped through the ocean, but through air also, and even land also, it is applicable. Marine Insurance Act is as per 1963. It covers the loss of damage to ships, cargo, terminals, and any transport by which the property is transferred, acquired, or held between the points of origin and the final destination. The Indian law of marine insurance has been put in a statutory form since 1963. So the other types of insurance are health insurance, can cover your health, motor insurance, motor vehicles, home insurance, travel insurance, commercial insurance, property insurance, engineering insurance, liability insurance, employee benefit insurance, business interruption, like in case of COVID extra. Functions of insurance, it provides safety and security to the insured. Protection, collective risk, risk assessment, certainty. Insurance provides certainty, provides protection, as well as risk sharing. Risk is shared between all the premium payers, isn't it? Now, there are certain principles of insurance. There are 7 basic principles. First is the principle of utmost good faith. There should be an underlying element of faith between the insured and the insurer. It is taken that the insured is revealing all kinds of facts pertaining to the event which he is requesting to be insured by the insurer, and the insurer is taken to be revealing all terms and conditions pertaining to the contract which is offering to the insured. So that's the principle of utmost good faith. If it's violated, then it would invoke pecuniary deductions or any such kind of claims. Principle of insurable interest means if I can insure a thing in which I have primary interest. I can't look for insuring my neighbor's property. That's the basic premise of insurable interest. Indemnity principle is the other thing. An insurer is promising you to bring back the property which has been insured to a state prior to the occurrence of the cause of loss. But this principle of indemnity is not applicable in case of death or life insurance, because you can't, nobody can bring back the dead, isn't it? Principle of contributions means if you have insured the same event, accident of loss with 2-3 different companies, then the overall compensation would total up to the value of the loss. But in the case of life insurance, there's an exemption. It's not exempt, it's exempted. Principle of subrogation means if, let's say, a piece of property has been insured and it got gutted in fire, and you have been compensated completely, thereafter you don't have any rights to that property. It goes to since you have received the complete compensation, the property owner now becomes the insurer. Principle of proximate cause means the nearest cause which can be attributed to the occurrence of the event causing the loss. Like, for example, if a hull of a ship has been rotten by salt of the ocean over a period of time, and finally the leakage started because of a rat munching on it, the immediate cause would be taken as the salt corroding the hull. So that's the principle of immediate cause. Now, conditions for motor vehicle insurance. There are steps for claiming includes informing the company, lodging an FIR, capturing photos, and submitting documents, getting the surveyor to do the things, and then the repairs and like that. So with that, I think I have covered some part of insurance. We would continue further. So some aspects only I have covered today. Thank you.